Hi everyone, welcome to Natural Rubber Market Outlook. This is episode number 28. So we start with a review of the prices during the last week. First, we will review how the prices performed in the futures markets. At the Shanghai rubber futures, averaged 2.2% higher during last week compared to a week before. But the increase in the case of Psycho TSR 20 was only 0.1%, 2.2% in Shanghai, but only 1.1% in Psycho. And on the JPS Osaka, RSS 3 futures averaged 0.4% lower. So we have a divergent trends. Shanghai, it is a clear uptrend. Psycho more or less steady or sideways, and Osaka marginally down. Looking into physical markets, at Bangkok FOB, STR 20 averaged 0.7% higher during last week compared to a week before. Kuala Lumpur markets, SMR 20 averaged 0.6% lower. In Bangkok markets, RSS 3 averaged 0.6% lower. Coming to Kottayam, India, RSS 4 averaged 1.5% lower during last week compared to a week before. Then coming to latex markets, Bangkok market averaged 1.7% lower, whereas Kuala Lumpur latex market averaged 1.3% higher. So it was a week with a divergent trends. Now let us examine what were the factors which influenced the prices during last week. So on this screen, left side, we are summarizing various factors which influence the prices or which influence the market sentiment during last week. So as I mentioned before, it was a week of mixed market sentiments. Mixed is in the sense there were positive news as well as there were negative news. And some of the negative news market took them in a positive way. So we will briefly go through various points. First of all, the most important development during last week was the downward revision of the World Economic Outlook by the IMF. So IMF had its earlier outlook released in April, that is 3 months ago. Compared to that, IMF substantially revised down the outlook on the world economy. Not only that, there were major downward revisions in the case of major rubber consuming countries like China, India, US, and European Union. It means rubber consumption is heavily depending on the state of global economy. A downward revision in the global economic outlook of major NR consuming countries implies the demand outlook for natural rubber will be lower than what was previously expected. This is a major negative news to the markets. Or putting it simply, because of the downward revision of the world economic outlook, NR natural rubber demand outlook is heavily impacted, negatively impacted. Then another important development during last week was the continued resurgence of the COVID infection in parts of China and continuation of the lockdown or new lockdown in some area. But its implication is that manufacturing activities and economic activities disrupted due to new lockdowns. So because of that, China's manufacturing sector affected, and that is reflected in the manufacturing PMI, Purchasing Managers Index, released by China today. So manufacturing PMI for July is 49.0. What is 49.0? If the PMI is less than 50.0, it implies that manufacturing sector contracted, means it came down from the earlier level. If the PMI is above 50.0, means manufacturing sector expanded. So July, it is 49.0. Not only 49.0, the July figure is the lowest in the previous 3 months. That means the continuous lockdowns due to COVID has impacted manufacturing activities in China, and definitely that also will have an impact on the demand for natural rubber also. That was another negative news. Then a major positive news also came from China. In China's economy, China's GDP, nearly 25% is contributed by the property sector. Property sector is having a major influence on China's GDP. So whatever happening in the property sector is crucial to the pace of economic growth. So last 2 years were, in fact, actually property sector were struggling due to several issues. We had seen some of the property giants going bankrupt. And now China has realized that the property sector should come back, should revive for boosting the economy. So to boost the economy, China has decided to revive the property sector by giving soft loans to some of the struggling sectors. Then another major development came from the US Federal Reserve. US Federal Reserve raised the policy interest rate by 0.75 percentage points, or it increased the policy interest rate from 1.50 to 2.25 percentage. This is a negative news because a higher policy interest rate means working capital is going to be more expensive, and also dollar is going to be stronger. So this is supposed to be a negative news, but market took it as a positive news, because after the meeting which took the decision, Federal Reserve Chairman indirectly sounded that further rate hikes by the Federal Reserve will be slower. That means Federal Reserve will be slowing its rate hike in future. This was a major positive news to the markets. That means in the subsequent meetings of the FOMC, Federal Open Market Committee meeting of the Federal Reserve, we are not expecting major rate hike. So this is a positive news to the market. In fact, the rate hike is a negative news to the market, but Federal Reserve's indirect sounding on the further rate hike is a positive news to the market. But because of that statement by the Federal Reserve, also it is vague and unclear, US dollar started softening. So this is another important development. Then another important development last week was the fourth quarter GDP of the US economy came out. Not fourth quarter, the second quarter. So first quarter US GDP contracted by 1.6%. I mean January to March quarter, it was contracted by 1.6%. And the second quarter, that is April to June quarter, US GDP contracted by 0.9%. So according to technical definition, an economy is in recession if it is contracting in 2 consecutive quarters. So according to technical definition, US economy has slipped into a recession. This is a negative news But again, market took it in a negative, in a positive sense, because technically speaking, US economy has slipped into a recession. That is true if one follows the technical definition. But based on several economic parameters, several key parameters, for example, retail selling, consumer expenditure, several parameters show that spending has increased, and that means the fundamental of the economy is strong and it is strongly recovering. It means that US is not concerned about the technical definition. It is giving more emphasis on the other parameters, such as data on the consumer expenditure, retail sales, etc., which are strong and also which are indicative of a strong economic recovery. So again, a negative news market took as a positive news. This is something interesting. Then another major development last week was as I mentioned before, dollar started softening. Dollar softening means Japanese yen's strength against the dollar strengthened. So the last 3 days of the previous week have seen Japanese yen strongly appreciating, strengthening against the dollar. That means a stronger yen is something, a negative news to the rubber futures traded on the JPS Osaka market. So because of that, JPS RSS3 futures became more expensive to overseas investors, and because of that, they kept away from the market, and rubber futures traded on the Osaka futures came down. Average during last week was lower compared to a week before. The main reason was the appreciation or strengthening of the Japanese yen against the dollar. So this is a summary of what happened in the market last week. So we had a mix of news, negative news, positive news, negative news, but market taking as a positive news. And we have across market, we have different trends. While dollars weakening, softening is helping some of the sectors, commodities, but opposite is happening in Japanese yen. That means we have a mix of factors. This was a summary of what happened in the market last week. Now, on the right side, we have the factors which are likely to influence the market in the week ahead. What we can expect in the week ahead. So we have a combination of negative and positive factors. We have positive news as well as negative news, a mix of factors. So when we have a mix of negatives and positive, it is often difficult to take a strong decision. Means those in the commodities and in the speculative market will be something like they feel some kind of uncertainty, whether it is going up, it is going to increase, whether it is going to decrease, a little bit uncertain. That means we have seen a substantially slashed global economic outlook, and a substantial and a resultant substantial downward revision in the demand outlook for natural rubber. This is something negative. And also uncertainty over COVID situation in China, and how this uncertainty is going to impact on Chinese economy and NR demand. This is also we have to wait and see what is going to happen during this week, whether COVID situation will worsen or it will improve. If situation is improving, that is going to be better. That means we can expect lockdowns getting lifted and demand prospects recovering, the rubber demand prospects recovering. So this is something you have to closely watch what is going to happen with reference to COVID situation in China. Then China's major policy initiative to support the country's property sector, which is accounting nearly 1/4 of the economy, is a positive news. It can support the markets in a big way. So in fact, the government has given a major emphasis on recovering or boosting the economy in the remaining months of the year. So government has a target for the whole year for the economic growth. Unfortunately, until July, the performance was not good. So now the government focus is to make up the previous month's slowdown by boosting the growth in the remaining months of the year. So that means from now onwards, from August onwards, we can expect China's strong policy support to the economy that is mainly focused on the property sector, which is accounting 1/4 of the GDP of the country, and Chinese economy coming back in a big way. This is something we can expect. Of course, that will have a positive impact on the rubber demand outlook also, because rubber demand, China is accounting 43% of the global demand for natural rubber, and the demand for natural rubber is closely related to economic growth. Then another positive factor for the rubber sector in the next week is the dollar is soft. A soft dollar is a favorable condition for commodity market, and rubber is no exception. So it means a soft dollar will be supporting rubber market in the coming week. But at the same time, we have to take into account that soft dollar means the yen will be stronger against dollar. That means the soft dollar or strong yen against dollar will have a negative impact on the rubber futures traded on the JPS Osaka exchange. So it means other than JPS exchange, other than outside Japan, a soft dollar is a positive news to the market, but a soft dollar will be making Japanese yen stronger against dollar. That is a negative news to the JPS Osaka rubber futures. Means the sentiment as well as factors are mixed with reference to their impact on the influence of the prices. Now, let us summarize. We have seen various positive and negative news. Let us summarize what we have discussed now. So we have reviewed what happened in the market last week. In fact, the week ahead is not different from the week before. In the week before, we have seen a mix of a combination of factors, a combination of developments with reference to the global economic outlook, and also US economy, and also Chinese manufacturing sector, several news. But interestingly, some of the negative news the market took in a positive way. So in the coming week, what we can expect, we have a combination of factors in the means we have negative news, for example, COVID situation in China, and also uncertainty over the global economy, and also US economy, also how the US is going to perform despite having 2 quarters of negative growth, how the economy is going to come back. There is a little bit uncertainty there. So what we can expect in the coming week is a combination of negative and positive factors. Means speculative investors will be a little bit uncertain to take investment decision. So we can't expect a strong recovery in prices because market players will be very cautious in the coming week. We can't expect a major recovery because of the combination of factors, because major recovery can be expected only if we have positive factors, but we have negative factors as well. So coming week, we are expecting market to lose direction, means it will be lacking any clear direction. It will be moving sideways. We always say it is a range bound. So this is what we can expect in the coming week. And that is a summary of the market outlook for this episode. We will see again next week at the same time. Thank you very much.